In previous video, you decided to pay less than 29.2 lakhs. But how much less? You will find out the answer by the end of this video. But first, let's look at the most popular risk-free investment in India, the fixed deposit or FD. FD gives approximately 9% interest rate annually. If you are buying share in business, then your share should make more return than FD, because as with business, you are taking risk of losses with your money. And what will be the point of taking risk with investing in business if you will make lesser return than FD? Let me refresh your memory with the definition of business share. Business share means ownership in business to the extent of your shareholding. In simple terms, share means you are entitled to future profits and losses in business up to your shareholding on pro rata basis. A business, if wants, can sell its shares to expand business or write off debt. One of the ways for business to sell its share is by getting listed on stock exchange and sell its share for the first time by an IPO, which is initial public offering, by which it raises money for growth of business. Coming back to the example of business M. Let's say M brings out an IPO and total shares of M equals to 1 lakh shares. M wants to sell 30% shares at the rate of 20 rupees per share. If you invest in this IPO and get shares allocated at the rate of 20 rupees per share, will it make a good investment decision? To find out, let's go into some very simple financial number of M. Let's look into P&L statement of M, which shows how much profit or loss made by M last year, taking into account its sales, expenses, taxes, etc. M's P&L of last year. Total turnover equals 29,20,000. Then comes expenses. Raw material, which in this case is procured milk from villagers, equals 20,44,000. Employee costs, which are salaries, equals 1,46,000. Rent and utility bills equals 1,46,000, which gives a total expense of 23,36,000, giving it profit of total turnover minus total expenses equals 29.2 lakhs minus 23.36 lakhs equals 5.84 lakhs. M also must pay taxes on profits to government authority. The new corporate tax rate is 25%. Hence the tax paid equals 25% of 5.84 lakhs, which is 1.46 lakhs, giving him a net profit of 5.84 lakhs minus 1.46 lakhs equal 4,38,000 rupees. After looking at P&L of M, let's do a simple calculation. Total number of shares of M are 1 lakh. Then net profit per share is equal to 4,38,000 rupees divided by 1 lakh shares, which gives a net profit of 4 rupees 38 paisa per share. Since the price of allotment of IPO will be 20 rupees, now listen closely. Then your return on investment or earning yield is equal to 4 rupees 38 paisa divided by 20 rupees equals 21.9%. Clearly, approximately 22% earning yield is greater than bank's FD rate. Hence, buying into M's IPO definitely makes sense. Coming back to original question. How much you will pay for M's 50% shares? Well, the answer is you will pay an amount lesser than 29.2 lakhs to the extent you get more than 9% as your earning yield. Minimum 15% of earning yield in every good business you choose as your tax-free nivesh. Stay tuned for more.
लेफ्ट वाले लिंक पे क्लिक करो टू गेट स्टार्टेड।